only monkeys randomly picking stocks by throwing darts in a wall were able to make as much money as the experts on Wall Street. And what that should tell you is that if you're too scared to invest because you don't know enough or you feel like you haven't been educated enough about it, you're losing money. You're giving thousands of dollars away every year by not investing. The biggest mistake you can make in investing is to not invest at all. What do you think about Joby stock? Joby. Let me see. Okay, Maurice, I'll look that up for you. Let me see here. Joby, Joby stock. Let me Google it. Joby Aviation. Okay, it's a cheap stock. Um, when I look at what's happened over the last 5 years, it hasn't been a winner. I don't like what I'm seeing. I don't see this as a company that's necessarily built for growth. Um, hmm. Yeah, I'm not a fan. I'm just not a fan. They're losing money. Their stock price has been crap for 5 years. Um, I mean, if you're a day trader or something, you want to make money on short-term fluctuations, that's a possibility. But even that requires luck. But literally, as I look at this now, this year, Joby's gone up 21%. But I don't know. I'm not a fan. I'm not really feeling Joby, to be honest with you. So that's my 2 cents. Um, let's see here. Okay, next question. And by the way, if you log in at the blackstockmarketprogram.com, there's a link at the top where you can leave questions and I can answer them first in class. Um, okay. So let's see, Maurice again. Okay, you're asking about two stocks. So since we talked about Joby, let's do a couple per week. So I'll look at this RSI stock. So you're asking about this gambling stock RSI. Now, here's the thing about gambling that's interesting is there was a record set for the amount of sports books in terms of the amount of gambling that was done on the Super Bowl. I think that FanDuel said they were getting 50,000 bets a second, and so there's a lot of sports gambling that's happening. It's terrible for society because what it's going to do is it's going to create a bunch of gambling addicts in our country and around the world, and a lot of people are going to be financially devastated from it. And I'm also especially bothered by the fact that they're using black men in these advertisements to promote their product. Jamie Foxx does an ad for, I forgot, I think it's Bet MGM. I saw Kevin Hart doing an ad. So there are going to be people that are going to get killed financially because gambling is something designed to be addictive. And if they're encouraging you to irresponsibly, if they're encouraging you to irresponsibly um, gamble like that, then certain people are going to abuse it, just like they abuse alcohol or drugs and all that. And I just really think it's just going to end up very bad. In fact, it's already getting bad. The gambling addiction is already like way out of control. But putting that to the side, I guess it's going to be a big growth industry. There's a lot of money that's going to be made in that industry. Investors are going to do well. I think I have some DraftKings stock. I might buy some more. I believe that once the economy recovers, it's going to continue to grow. I mean, if people gamble this much when they're struggling financially, imagine what it's going to be like when the stock market goes up and people start feeling rich again. I have big hopes for the industry. Now, in terms of this particular company, Maurice, Rush Street Interactive, I guess that's the name of the company. This gambling company. I don't like this stock. It's a cheap stock, but I wouldn't aim for stocks just because they're cheap. Remember, you can buy fractional shares. So you can buy a share. Buying a share of a company with a stock price of $1,000 is no different from buying a share of a company with a stock price of $2. Just the $2 stock makes you feel like you own more because you can buy entire shares. But buying, $2 worth of Amazon is the same as buying $2 worth of another company that has a share price of $1. You're still getting the same amount. The difference with lower price stock versus big higher price stocks is that it's like a pizza. It's like if you chop a pizza into 5 slices, and then you give somebody 2 ounces of pizza, and then let's say you chop the pizza into 1,000 slices and you give them 2 ounces of pizza, it's always 2 ounces of pizza. It's just in the second pizza where they've done more chopping, you feel like you're getting more pizza because there are more slices, but actually you're not really getting more pizza. So it's a psychological effect. So I wouldn't look for stocks that are just low price just because they're low price. I would look for stocks that are quality companies that have good growth potential. If a stock hasn't had a positive return over the last 5 years, or if the last 5 years have been pretty negative, I'm not particularly interested in owning that company. I don't, because there's nothing there that really tells me, okay, this is going to be a long-term winner, because the last 5 years have just been terrible, right? So that's my 2 cents. All right, so let's see here. The next question is Picola. Picola says, Dr. Boyce, here are two stocks, GWH and GEVO. Which are these good investments in your opinion? Okay, I'll look at GWH. GWH is is that company ESS? Okay. Well, it hasn't done well in the last. It's gone down 78% in the last 5 years. I don't see any reason to think that this company is going to do well. It doesn't look like it's had a lot of good news. Let me see. A lot of analysts like this stock, though. A lot of analysts are predicting that ESS is going to do better. So the ticker symbol is GWH. And in fact, Picola, I actually like this stock. So what I'm going to do is, since I told you guys, I don't just tell you all like what I'm investing in. Like, I'm investing with you. So if I go through a stock that you guys have picked and I like it, I'll buy some for my wife. Like, she'll give me more kisses if I make money. So what I'm going to do is open up E-Trade, and I'm literally going to buy the stock right now. And the thing about it, and this is really, I think, a good habit to get into. I would encourage you to just not overthink it. Like, if you want to, if you have some extra money, you want to get to the point eventually where you just buy stock so much, so consistently, that you don't even remember which stocks you own. It shouldn't be like sort of this big thing. It's not like getting dressed up and going to church. It's literally no different from going to buy a cup of coffee or buying a meal at McDonald's or something. You don't remember every time you ate at McDonald's because you didn't think about it. You just stopped and got the kids some food, and that was it. Well, I think the same thing should be true when you buy stocks. So like, as I sit here and I buy, while I'm casually speaking with you, I buy 200 shares of GWH, because Picola said it's a good investment. I won't even remember doing this, 6 months from now. But later on, if these analyst expectations turn out to be accurate and the stock triples in price and I make a bunch of money from it, then I'm going to look at it and say, oh, look at that. I planted a seed that grew into a big, beautiful vegetable, right? So the key idea behind wealth building is you want to be a person who plants seeds. I will never for the life of me understand people who don't understand why they're poor, who don't understand why they're broke. Because what I would like to do is, when you're telling me about your life in the present, I refer you to the past, and I say, well, I would want to ask you, well, did you plant any seeds? Like, what seeds did you plant that were intentional in creating wealth for you right now? Give me a yes if you understand what I'm saying, right? And if you can't tell me things that you did deliberately and consistently in order to build wealth, then why would you have any wealth? Why would you have any? Did you think that there was a stork that was just going to magically deliver money onto your doorstep? If I lose weight, I could probably tell you. Like, if you see your friend and they lost 50 pounds, and you say, well, how did you lose 50 pounds? They're never going to say, well, I don't know. I just kept eating Cheetos, and one day I woke up and I was 50 pounds lighter, right? The only way they'll say that is if they got sick or something, right? But if they're healthy, they're not going to say that. They're going to say, oh, yo, girl, let me tell you what I did. I started, I cut out the carbs, and I started eating, I tried this diet, and I started eating more salad, and then I started going to the gym 3 times a week, right? They were planting seeds. So with investing, it's the same thing. The reason that I know that I'm going to die a rich man is because every opportunity I get, I invest. Every nickel I get, I just take the money, usually, and I'm throwing it in towards stocks or whatever. I buy stocks in my sleep. That's what I love. It's a fun hobby. And you can do that even if you don't have as much money as the next person. You don't have to have a lot of money to do this. I've seen people do this who make minimum wage. They just, the same way somebody else might take money and spend it on a new video game or new pairs of Jordans or going out to eat. they're taking their money and they're just buying $5 worth of stock, $10 worth of stock, just whatever, right? So get in the habit of doing that. That's how you become a good investor. Don't overthink it. Don't think you have to have some high level analytical capability to do this. You just have to have the desire to plant seeds. If you're a good farmer, then you can be wealthy. All right. So let's see. The next one is GEVO. Let's see. So Pecola gave us one good one. Let's see if Pecola gave us another good one. GEVO, another. Okay, it's a $2 stock. So y'all keep bringing me these single digit $2-3 stocks. That tells me you're thinking small. No, I'm not dissing you, Pecola. I love you. I love you. But really, don't feel like it's only the $3 stocks that are in your price range. The $1,000 stocks are in your price range too, because you can buy fractional shares. You can get on Robinhood app and you can buy shares in Berkshire Hathaway, which had a stock price in the thousands, right? You can do that. Remember, fractional shares let you do that. So don't feel like you're only limited to the stocks that are $5 and stuff like that. Okay. All right. So with that said, yeah, so it looks like GEVO is another company that's had a rough few years. They're a renewable chemicals and advanced biofuels company. It's crazy how many like multi-billion-dollar companies white people own that we would never hear anything about. They're not their wealth isn't built on having a few people who became successful rappers or a couple guys in the NBA. Like they literally, my wife met a guy who was filthy rich. And she said, well, how did you get so rich? And he said, well, my family makes the little springs that go in couches. They make all the springs that you put inside a couch. How many black people that are as rich as, Jay-Z, that literally got rich by making like the spring inside a couch, or making like, I don't know, desks or light bulbs or, or I don't know, or ink pens or something, right? Like I think that's what we have to focus on too in the next generation is all the different ways to get really, really filthy rich with, offering things to people that are not, that don't involve singing, dancing, rapping, or playing basketball or football, right? There are a million ways to get rich that don't involve entertainment. And so let's see, GEVO, the information I'm looking at, I don't like it. Although there are some analysts that do, but it doesn't have a lot of analysts. It only has 4 analysts, and the 4 analysts give a very wide range of expectations for the stock. I'm willing to bet you that this stock, like a lot of others, will probably move up when the whole market starts to move up. Right now, making money in the stock market is easy because it's going to be like shooting fish in a barrel. And let me tell you why. Does anybody remember when the Fed started increasing interest rates and how almost all your stocks just started going down at the same time? Did anybody else notice that? If you've been a consistent investor, you've noticed that. If you're not a consistent investor, please listen to what I'm saying. I'm begging you on behalf of your grandchildren. Please incorporate that into your lifestyle. Just whatever you can afford, just incorporate that and then teach that to your kids. It's very important. All right. Well, did anybody else notice that? Well, that's because stocks across the economy have a certain type of connection to each other. They're correlated. They call that correlation in statistics. They're just connected. They're like all of these stocks and all these companies are like ships that are in the same ocean. So when there is a big, not typhoon, I guess they call it typhoons or what they call it, the big wave, tsunami. When there's a tsunami in the ocean, there's not a boat in the ocean that isn't going to be affected by that tsunami. All of them are going to get hit by the tsunami. Now, how they react to the tsunami is going to vary. And this is what they call idiosyncrasies. The idiosyncrasies are going to be caused by little variations in the different boats. The big boat is not going to be affected the same as the tiny boat. The tiny boat might capsize and just go underwater. The big boat might just feel a little bit of a wave, right? The captain, the quality of the captain, meaning the CEO, the quality of the captain. If you got one captain that knows, oh, when the tsunami's coming, you got to turn the wheel into the tsunami, and the other captain's like, no, you got to turn it away from the tsunami, but that's actually wrong because he never got actually trained on how to be a good captain, and his boat flips over because of that, even though they have the same size ship, that will make a difference in terms of how the ship reacts to the tsunami. The economy is the water. The economy is the tsunami. That's the recession, right? What's another variation? So you got the size of the boat, you got the quality of the captain. Oh, the direction that the boat is pointed when the tsunami comes. Some boats might be headed straight at the tsunami. Some boats may be headed away from the tsunami. So if you're a boat that's literally doubling down and headed right toward the tsunami, you're gonna get hit differently than than a boat that's headed away from the tsunami, right? Or a boat that is close to the location of the origin of the tsunami is going to get hit differently from a boat that's far, far away, that's on the other side of the planet, right? So ultimately, all these factors. So we named at least 4 or 5 variants, right? Size of the ship, so it ain't just the motion of the ocean. It's you got the size of the ship, the quality of the captain, the direction that the boat is pointing, the distance that the boat is from the origin of the tsunami, right? So speaking economically, if there is a recession or if there is inflation or whatever, different companies have different abilities to respond to that. Um, some companies are just good at making money. Some companies are bad at making money, and they were just making money only because the rising tide was lifting all boats. It was a good economy, so it looked like they could make money when really they couldn't. Really, they were this close to sinking, and now the tsunami kind of reveals them for what they actually are. And so what's going to happen though is the same way all your stocks kind of went down a big, the majority of them went down as the Fed started hammering away and kind of slapping the market over and over with these interest rate hikes. Well, guess what? When the slapping stops, these stocks are going to rise together too. So if I'm a person that's trying to have a come up and I've got a little extra cash I can invest, I'm pouring every penny I can get my hands on into the stock market and investing in good quality companies that are going to probably rise when all the other companies start to rise. That's an easy play. That's not that you don't need a college degree to do that. You just have to have patience and the ability to plant seeds. So there you go. I just made you some money right there. Okay. All right. So let me hop in and answer a couple more. Okay, so let's see here. Yeah, Gevo, Picola. I didn't like that as much as the other company, but I'm only going to do about 4 or 5 stocks today. So if you got more stocks, I'll maybe do one more, and then after that, I want to talk more about what's going on with the market. Um, let's see, Dr. Boyce. Let's see. I purchased how to invest in stock options. I'm new to stock investing. What course should I start with? Introduction to stock market investing mini course or how to invest with stock options. Thank you. Asked Denise Berry. Okay, so so really, Denise, I would say that learning about stocks is something you should do before you learn about options. Options are almost like advanced stock market training. It's hard to understand options if you don't understand stocks, because options are based on stocks. So options are like if you have a parent and the parent gives birth to a baby, the stock is the mother or the father, and the options are the children. And so the same way, like when my wife goes to the mall and she's walking through the mall, the kids are following, our girls follow their mother all throughout the mall, right? But the thing is, the way they follow her is not precise. Like our little one, she'll kind of wander off sometimes by herself, but then her mother says, "Come back over here, Taylor," and then she comes back. Right? The teenager maybe wants to go into Forever 21, and then the mom has to kind of pull her back in, right? So they generally follow their mother, but they don't follow her in complete lockstep. So stock options are similar. Stock options, they all have different characteristics. They're all they're all what they call derivative securities, which means they derive from the mother. The mother is the stock, so they all derive from the stock. They all react to the stock, but how they react varies based on the characteristics of the option. So a stock option that is deep out of the money is going to react differently than a stock that's deep in the money. A stock that is close to expiration is going to react very differently. Excuse me, an option that's close to expiration is going to react to the stock very differently than a stock that has a long time to expiration. So ultimately, understanding options is a great thing that you want to do. If you've dug into stocks for a while, I think learning options will benefit you because it gives you just more angles to play with and allows you to kind of do things like I was mentioning earlier, the stock replication strategy I'm doing with Disney, where I bought a deep in the money option on Disney, which meant that instead of putting up $108 per share to get exposure to Disney, I only had to put up $23 per share. But I still, because the option has certain characteristics, I'm able to create a security that gives me the same financial dynamics as Disney. So if Disney goes up, I'm still making money. I just didn't have to put as much money up in order to participate in that investment, and the risk level is not insanely high. So that's I think options are good. I think they're fun. I would encourage you to take a look at them. And if you're still thinking about it, again, you can feel free to go to my website, boycewatkins.com. There's some stuff over there. At the top, there's that lecture, How to Make Money Without Working. That's where I talk specifically about selling options. And I love to sell options. That's how I make my money. But then also on the buy side, there's a lot of stuff you can do that will allow you to take advantage of the leverage in the market. But what you want to be careful about is not get caught in into a gambling cycle where you're just throwing a bunch of money at stuff and hoping that it works, and trying to sort of win on these long shots, because then you're going to end up losing a lot of money, because people that buy out of the money call options on average lose their money. So just keep that in mind. Just be careful. Make sure you know what you're doing. All right. So Gwen Glover says, I already have E-Trade, but don't own 100 shares of stock. Should I buy 100 shares of Clove and then using E-Trade create a call debit spread in real time? Don't have Robinhood Gold yet, as I need to qualify to use options. Okay. Okay, so let's see. So the question is, should I buy 100 shares of Clove, CLOV? I haven't looked at Clover Health. I don't own it. I used to own it. I didn't like it, so I got rid of it. I think that there are other stocks. If you log in at the blackbusinessschool.com, there's that section called Dr. Boyce Moneymakers. So you can look up Dr. Boyce Moneymakers, and those are the stocks that I sell options on. I don't like Clover Health because it's just such a terrible. It's just, I mean, the stock is just painful to own, and it's trading at $1.18. And so the only way I'd buy Clover Health is for fun. If I just wanted to buy something that I was hoping would possibly turn into like some massive winner in the future if the company survives the downturn. But I'm just not interested in throwing my money away. So I don't know if I'd invest in Clover Health, to be honest with you. I would look into something that's a little bit better, a little more stable. But generally speaking, if you want to do a call debit spread, you don't actually have to own shares of the stock in order to do a call debit spread, but you do have to get permission from the broker to allow you to do a call debit spread on the option. Okay, so yeah. Now, if you want to sell calls, if you want to sell covered calls, you have to own 100 shares of the stock, and that's kind of how that works. Okay, so let me see here. Jan Jasmine says, "Have you ever heard of Udua coin?" Um, I'm not. I'm gonna tell you the truth. I'm kind of tired of like all these new coins people are creating, and I kind of feel like crypto has just become like this graveyard of like really bad financial deals and regulatory uncertainty. So I don't want to be a pessimist about it. I mean, I'm sure it's beautiful, and I'm sure there's lots of like pro-black language on the site and everything. And I'm not gonna say that it's not. I'm not gonna say that it can't work. I'm just gonna say, you know, let me. Here's the site. Let me just put the site on the page. It's Udawa Coin, ODUWACOIN. They have a white paper. It's a first Pan-African blockchain currency, bringing back trust to the people. Cryptocurrency for the unbanked and underserved. Like, all that sounds really good. And I'm not here to say, you know what? Here's what I would say. I would say that if you like it, maybe take a look at it. Maybe it's worth a try. I'm not here to say that it's bad. I'm not going to say that, because it's a black project. And for all I know, the creators, could have every intention of doing something good. I can just say that it's hard to tell. I know that when cryptocurrencies get created, the regulatory environment is very fuzzy. So a lot of investors are getting killed. They've just gotten killed. Like, so much money has gotten lost from, there were 12,000 cryptocurrencies that are no longer in existence that collectively took in probably several $100 billion from people. And this money is in somebody's pocket. Somebody ran off of that money. And so I can't in good conscience, like, look at something new that's been created. And I don't know the founders, and I don't know who they are, what their background is, or the integrity level, and say, yeah, let's go invest in that. I'm not saying that it doesn't work, though. I mean, for all I know, they could be geniuses that are doing something amazing. So I'm not going to sit here and say anything negative in that regard. I'm just going to say that I feel like crypto kind of went a little bit too far and got a little bit too crazy. And people were creating crap. They were just creating. They would just find out what you want to hear, and they would say what you want to hear, and convince you that this is the next big thing. And they would do it to black people on a regular basis because black people invest in crypto more than everybody else. I don't know if y'all know that, but black people, they actually talked about that in an article I read recently where they were saying that black people lost proportionally wise more money in crypto than any other group because we're the ones that kind of believe in those get rich quick schemes. We buy into the blessing looms and Ponzi schemes and MLMs and everything else. And I'm not saying that those things are always bad. I mean, I don't think every MLM is bad. I don't. But if somebody comes out to me and they see the network I have, like they see the, like my podcast, we reach over 1 million black people a week. And I'm very proud of that because we didn't get any corporate backing, no government funding. Like we did this, we built this on our own. Um, people come and they want to get me to promote their MLMs, and I just say no, I'm not going to do it. Not because I hate what you're doing. It's just I know the mechanics of what you're doing and I get it, but somebody gets hurt. You have scenarios, but then again, pure capitalism is a little bit like a Ponzi scheme too. Look at our society. The richest 10% make most of the money, while the other 90% are doing all the work. And so while I can be critical of these other schemes and systems that are out there and things I just don't want to participate in, it's not as if the biggest Ponzi scheme in America isn't being run by the federal government. So what I can best say to you is, if you do something, just make sure you know what it is. Make sure you're prepared to lose money, if necessary. I don't like to even invest in a lot of startups anymore. I've invested in startup companies in the black community, and I still do. I still will. I just have to. But when I invest in stuff, I have to be much clearer about who the founder is, how I'm going to get my money back, stuff like that. Because I can just tell you, for example, I put $50,000 behind a project that was being run by another person, in the conscious black community, and we made an agreement on how long it would take to get my money back and everything else, and I never got my money back. I'm not going to say anything because I don't want to be mean to anybody, but it really upset me because I was like, sheesh, you promised me certain things and you're not delivering on your promise, and this is not going the way you anticipated, and you're locking up my capital that I promised to somebody else. I promised someone else I would use this money to help them do something, and now I have to break that promise. So the personal decision that I made is that when I make investments, I like to invest in things that are somewhat liquid. If it's not liquid, then it won't be a lot of my money. I'm not going to put a ton of my money into something that's highly illiquid. Or if I do put more than a small amount, it has to be with people that I really know, like my daughter or something, right? Not, Joe Blow, who came up with some idea that he thinks is going to change the whole black community, and he wants me to put $100,000 in that I may never see again. I just don't do that anymore. So when you invest, think about not just how much money that can be made. Don't let people play with your emotions and your pro-black sentiment and all that stuff. Um, Try to find that, make sure the investment matches, not just in terms of the amount of money you make, but is it the kind of business that you want to be involved with? Like, you really want to watch, you want to be connected. You don't want to just give somebody your money and hope for the best, your cousin's liquor store, and just give him your life savings and then hope that, he gets it back to you. He probably won't, because it's hard to sell those businesses once they get created. So getting your initial capital back is going to be very difficult to do in a lot of cases. So also think about liquidity. What happens if I have a financial emergency and I need my money? Where can I go to get my money back? And also, transparency is important too. How do I make sure that whatever you say you're going to give me, if you tell me you're going to give me half the profits, I need to know that I can get an independent accountant that can go into those books at any time and figure out how much money is mine and how much money is yours. So think about these things as you make investments. So I'm not saying that I don't like what I just saw with, what you showed me with Udua coin. You may want to put a little money in it if you want to, just to support. But I don't know these people, and for all I know, the site could just be something someone put up that was very pro-black to get black people's money. So just be really careful. All right. So anyway, I know I probably sound like a pessimist, but believe me, that pessimism came from getting burned so many times. Because even I can get burned, and I know a lot about finance, but it can happen to anybody. So just be careful. Let's see, Anthony, Dr. B, if the nation starts saving more and spends less, will that help inflation? Yes, it would. That's the answer. But America, we don't save and we love to overspend. So that's your problem. Let's see, Tramel, when you mentioned taking a position in the stock, what does that mean? Taking a position in the stock means basically buying the stock. So if you don't own any shares, then you don't have a position. Or you could also sell the stock and go short. That's where you sell before you actually buy it back. That's also taking a position. So taking a position means just basically getting into the game. So think about it like football. If I play a position on the football field, that means I'm on the field, right? So my position might be quarterback, it might be wide receiver, I could be defensive back, safety, whatever. But I'm playing a position, right? Because I'm actually in the field, in the game. So if you're in the game on some level, then you've taken a position in that stock. So anyway, let me keep going. Seth, what do you think about American Resources Corp? Bring that stock to us next week, Seth, and I can look at it then. Or you can log in at the blackstockmarketprogram.com and I will look it up for you for next week. Are you able to recommend a low entry $10 or below stock option company? Let's see if you don't have a lot. Okay, stock option company. I'm sorry, I don't know what you mean by stock option company. Do you mean a stock that's below $10? Is that what you mean? If you mean a stock below $10, I think we talked about a couple earlier. That one, Picola mentioned a couple companies, and I bought them. In fact, I forget when I buy stock. I just forget it that quick. I don't remember what the companies were, what the ticker symbols were, but those are a couple companies that are below $10. Greetings, Dr. Boyce. One of my students would like to know how and why does inflation affect tech companies? Does that link to companies firing people in large numbers? Great question, Ronnie. And Ronnie has his students, man. I think they're so smart. These kids are going to be so rich one day. You have no idea how much of a difference it makes when you introduce kids to investing when they're younger, as opposed to like letting them figure it out when they're 35. Like thank you. Great job. Everybody should be doing what Ronnie's doing. Okay. So inflation, okay. Why does inflation affect tech companies? Well, typically tech companies are what are called long duration stocks. That long duration means they're expected to make their money way out into the future. So if you are making your money way out into the future, inflation affects you because it affects the models that are used to value the stock price. So a company that's going to make money now, today, is going to be affected differently if there's inflation than a company that's going to make most of their money way off in the future. Like if you think about, I don't know, like think about like imagine LeBron James now at 38 years old. He's already made a bunch of money. His best days are behind him, but he's still making money. Um, and imagine if something happened, like there's I don't know, let's say he hurt his knee. How would that affect the economic value of LeBron James? Well, it would drop a little bit because he can't play anymore, but he would be okay because he's LeBron. He's going to keep making money. He's making more money off the court than he's making on the court. His career is well established. If he were a stock, he'd be a mature stock. Okay. But imagine if you took a baby LeBron who's 2 years old, lives with his mom in the projects, has his whole future in front of him, and then let's say that LeBron hurt his knee and can never play again. Well, then his stock would go from a billion to nothing, right? Because baby LeBron hasn't made any money. His money is way off in the future. The duration, the amount of time that must pass before baby LeBron makes his money is like 18 years. He's not going to start making money until he's 18, 19 years old going into the NBA, right? And so baby LeBron hurting his knee is different from 38-year-old LeBron hurting his knee. So same thing's true with companies. You have older companies that are short duration, younger companies that are long duration. They're just young upstarts that are just now starting to kill it, that where their best days are in front of them. So when inflation comes along, that's like a knee injury. And these younger companies are going to get hit harder, which tend to be the tech companies. Those are the tech startups that are going to make all this money. Those younger companies get hit harder than the older, more mature companies like, I don't know, like a Coca-Cola or whatever, some big, or some cigarette company or something. And the other thing is, does it relate to all the layoffs? Yes, it does to some extent. So here's where I see the layoffs coming in when it comes to tech. So as the economy has sank, the economy has sank because the Fed has been increasing interest rates. The Fed has been increasing interest rates because of inflation. Inflation got out of control. The Fed came in and said, okay, we're the police, we're the financial police. We got to increase interest rates until we stomp out inflation. So as they're trying to stomp out inflation, again, it's like a police raid coming into a black neighborhood. You know how the cops do. Like they'll start arresting grandma and kicking down doors and just wreaking havoc, right? Just doing more harm than good, right? Or it's like chemotherapy. You know, when somebody gets cancer, the chemo comes in and it kills the cancer cells, but it kills the whole person's body too, right? So the Fed comes in with a sledgehammer and they're just banging away at the economy because they got to eradicate inflation. So they're killing the inflation, but they're also killing the economy. As they're killing the economy, they're killing the stock market. So the stock price starts to drop, drop, drop. Well, the owners, the people that run the tech companies, the CEO of the tech company, like CEOs of Google and Facebook and all that, they work for the shareholders. So the shareholders are coming to the shareholders meetings and they're pissed because they're mad because their stock prices dropped 20% in the last year. And they're like, you need to do something to get this stock price up. Well, one of the things that they do is they start reassessing their business models. So they go in and they say, oh, well, you know what? Well, we got too many employees. If we get our profit margins up, if we fire some of these people, we can increase our profits. If we increase our profits, our stock price will go back up. So effectively, all the layoffs indirectly are affected by the inflation because the inflation affected the Fed, and the Fed affected the economy affected the stock price, and their goal is to maximize the wealth of the shareholders. That is literally in when I taught finance classes at Syracuse. That was literally the first thing that we had to teach them out of the textbook. It was required. I had no choice. But the number one goal of the manager of a corporation is to protect the wealth of the shareholders. That was the goal. That's it. There is no other objective. So there we go. All right. A few more questions, then we'll be done for today. K Hit says, my daughter and I had trouble getting in class last night, and I need an email with a login. Huh? Okay. Oh gosh, you know what? Kim, Miss Hitchcock, do me a favor, Kim from Cincy. Chanel is in the chat. Chanel, can you please take care of Kim and make sure Kim is taken care of and gets what she needs? Yeah, I sent out the text to you guys, and so yeah, I don't know what to say about that, but let's get to the bottom of that so you can get the next invitation and you can come into the class. I don't know what happened. I want to find out because I want to make sure you can get in. There were a few hundred of you there last night, so I assume that it went out to, it got out to most of you, but I know if you were in that category where you didn't get the message, let's fix that. Also, don't forget in the Black Business School, we have a great support team. You can go to email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. And there we go. All right. And check your email also, because if you want to come to the Black Wealth Bootcamp, which is going to be in Los Angeles in March, and then we're going to do a couple other cities, you can actually get a discount. If you're a member of the Black Business School, you can get a discount. So check your email. And right now, I think that they took 48% off the price, but it's for 2 days, for 48 hours. So check your email for that. All right. And if you want to learn more, you can just go to my website, boycewatkins.com. The information is there. Is there AI? Is there an AI ETF? You know what? I don't know. I don't know if there are any AI ETFs. Let me see. Are there any AI ETFs? I'm sure that there are, because everybody wants to. You know what? The closest thing I can think of that would be like an AI ETF might be Kathy Wood's company, ARK Investing. If you look under ARK Investing, I bet you they have some AI ETFs. She invests in anything that's like cutting edge tech. But truth be told, a lot of companies have really good AI ETFs. Vanguard has one. Every company, everybody's on the AI trend, basically. AI is kind of the big thing right now. So yeah, you got a few. Another one is the Global X Robotics and Artificial Intelligence ETF, and I don't know who runs that, but if you look up Global X Robotics Artificial Intelligence ETF, you'll find that. Okay, let me see. A couple more questions, then we can bounce out for today. Okay, Donna, can you explain how buying margin works and can it be beneficial? Okay, so margin is basically a loan. So what margin does is it keeps you from having to put up the whole price of the stock. So and can it be beneficial? Yes. If it's used carefully and the market conditions remain good, then it can be wonderful. But remember, a lot of people that go bankrupt and get killed, like Sam Bankman-Fried and other people, is they go bad. They get killed financially because they overuse margin. Debt is an accelerator. It's a financial accelerator. It's a financial time machine. And why do I call it a financial time machine? Well, because debt allows you to gain access and control of assets that would take you years and years and years to save up money to buy. Like when you go into debt to buy a house, debt is a good thing because debt allows you to go ahead and get in the house and enjoy the house, even though you haven't paid the house off. You can pay it off over the next 30 years, but in the meantime, you get to live in it and enjoy it while you're making those payments. So leverage, a margin means that, so if a stock has, allows you 50% margin, that would mean you'd have to put up 50% of the stock price. If they allow you, if they do 60% margin, you'd have to put up 60% of the stock price. And then what they have, and then so what happens is that, let's say you buy stock and you're doing 50% margin, so it's 50-50. So the stock, you buy $2,000 worth of stock, you put up 1,000, Robinhood puts up 1,000. Now Robinhood doesn't care if your stock goes up or down. They're not looking to make a profit. They just want their interest. That's all they want. If you pay them their interest, they don't care if you go make $1 million off their money, but you better pay their interest. So when you buy the stock, $1,000 of that stock is equity, which is yours. The other 1,000 is debt, which belongs to Robinhood. Now let's say that the value of that stock drops from $2,000 to $1,500. Well, Robinhood is not going to take any of that loss. They're not taking any of the gain, but they're not going to take any of the loss. So Robinhood is going to say, well, it looks like your stock dropped by $500. We're not taking a loss. We still have $1,000 worth of whatever is left. You've only, on the other hand, only got $500 now because that whole loss belongs to you. All the gains belong to you. All the losses belong to you. So then what happens is you can kick in what is called a margin call, because you have a maintenance margin. A maintenance margin is the percentage of ownership, percentage of equity that must be maintained at all times in order for them to stay in the game. Because what happens is that when your company or when your investment gets a little too sick, your debt holders scramble. They say, oh, hell no, we're getting off this ship. We want you to pay us back immediately with whatever's left. There's $1,500 worth of stuff here. Give us our 1,000. You can have your 500, and then we part ways. We're out of the deal. We don't want to be your business partner anymore unless you put in more cash. So you got two choices. You can either sell the stock you have and get out of the deal, or you can actually put more money back in and increase your equity. So margin calls have led to the failure of many, many companies. It's led to the bankruptcy of many, many investors because people get greedy and stupid and crazy, especially when they start making money and they start thinking that debt is always good and that they should take on as much debt as possible. And that explains why 80% of these damn crypto billionaires went broke when all they had to do was not be so greedy. At the end of the day, greed will kill you when it comes to investing. So margin can be used to accelerate and enhance your portfolio. But if you overuse it, you're going to be sorry that you did. Okay, let's see here. Let's see. Someone asked about Clover again. Yeah, we talked about Clover earlier. I don't like it. I wouldn't buy it with a 10-foot pole. Let's see. Akila says, as an older person, say in their 70s, what's a good way to invest? An ETF or something else? ETFs, I think, can work, Akila. I think the question becomes, what is your goal for investing? I don't think investing should be just for you. I think it should be for you and anybody that you love. And remember that no matter how much time you feel like you have, let's admit, when we're in our 70s, we're not as young as we used to be, right? So hopefully you'll live to be 130, but you may not, right? And but here's the thing: your grandkids, your et cetera, they got many, many years left, and so they've got a really valuable asset that they should be encouraged to invest, and that asset is called time. And what that means is that grandma can go and make a tiny investment for these grandkids, and even if that investment is growing slowly, by the time that 2-year-old grandchild becomes a 25-year-old, they're going to have hundreds of thousands of dollars, and they'll have grandma to thank for it because grandma was planting seeds for them. So investing is great when you plant seeds for yourself and then you harvest those seeds yourself. That's nice. But that's not the ideal situation. That's not ideal. What's ideal is not for you to plant seeds for yourself and for you to harvest seeds for yourself. The ideal is for someone else to plant seeds for you. And then you get to harvest the seeds because of what somebody else planted for you. And then you get to plant seeds for somebody that may not even be born yet. That's really where you get the real money, right? So I think about like investing for yourself as like when I was a little kid. I don't know if anybody ever played football, but you ever go outside to play football? If you never played football, you may not get it. But just imagine this. Imagine I would go outside and I would want to play football, and I'd be looking for my friends, and there'd be nobody there to play football with. So what do you do when you're like 8 years old? Well, you start doing weird stuff like throwing the ball and then running and catching it yourself. And then you realize you can only do it so far because you can't run that fast. And that's kind of what I think about when I think about like invest your younger self investing for your older self. It's like you're throwing the ball and then you're catching it yourself. And that's nice. That can make for an interesting football game. But a better game is one where somebody else is throwing the ball to you, right? Where you got a quarterback that tells you to go 80 yards down the field or whatever. And then the quarterback heaves the ball down the field. You go so much further that way when you have teamwork. It's so much easier to build wealth when you have teamwork. And so one of the biggest things that in 2023, this is my big thing, is with this book, The 10 Commandments of Black Economic Power. I'm encouraging you to really think hard about what teamwork and good relationships will do for your long-term family wealth, and how so much wealth gets missed because we don't think about these things, right? My wife bought her first house from money that her grandfather invested for her in 1945. Black people you don't hear about a lot of black people doing that, but we could. White, there's nothing special about white people. We can do it. There's nothing special about Jewish people. There's nothing special about Asian people. We can do it. You just got to stop listening to the people who tell you that you can't, or that somehow planning and strategic thinking and long-term focus is something that other people are supposed to do that we're not capable of doing. We know that that's simply not true. Some of you are doing it right now, and I want to just encourage you to do more of it. So that teamwork is where you get. I was talking the other day to a friend of mine who's he's a rapper, and he had a group that actually, you know what? I don't think he mind me telling you. My friend is from the Ghetto Boys, Willie D. Willie D. And if you remember the Ghetto Boys, you know Willie D. You might know Willie's my friend if you've been following for a while. He was in my wedding. We're very close. And Willie was telling me about his family and how he told me that his family owns the name of the Ghetto Boys. Because I asked him, I said, who owns the name of the Ghetto Boys? And he told me, because I think there was a little bit of a rift. There's a little bit of a conflict there, and there's more. It's on the internet. You can probably look it up. And I said, well, who owns the name of the Ghetto Boys? And he said, oh, my family does. And I said, oh, interesting. I said, and then he told me about his son. He said, my son is a businessman, and my daughter is an attorney, and she's a copyright attorney. I said, you know what you're doing? I said, what you're doing is you're doing the same thing that Kevin Costner's character does on this show called Yellowstone. It's on Paramount Plus. And Yellowstone is about a family called the Duttons that have a 100-year legacy where they own, thousands of acres of land in the Montana mountains, and they have different TV series. One's called 1893, the other one's called 1923, and the other one's called Yellowstone, where they follow this family over a 100-year period, and they show how each generation fought battles to prepare for the next generation. Each generation acquired land and made these, investments that benefited future generations. So now in 2023, everybody's wealthy and they have all this land because of things that happened way back in 1893. And I said, you know what? John Dutton on that show, Yellowstone, on that show, his daughter is a businesswoman whose job it is to protect the family assets. His son is an attorney. And the reason he told his son to go to law school was because he said, son, I'm going to need you to be able to fight the legal battles necessary to protect our land. So this mindset, that's a power play. That's a powerful mindset. That's where empires come from. That's how you build legacies. You don't really build a great legacy when you tell your kids, okay, I want you to go to college, graduate, and then go work for the first white man that'll hire you. Right? Just go, just leave the family, abandon the family, and go work for whoever will take you. Right? That's not how you build legacies. You can actually build legacies by saying, no, I don't want you to go out there. I want you to go get the skill and then come back home and pour that into whatever we got going on right here. That's how China became the most powerful country on earth, is they started encouraging their citizens to bring it back home, bring it back home, bring it back home. So just think about that as you decide what your legacy is going to be. It will be as powerful as you choose for it to be. This is your opportunity. It won't last for long. It's going to go away soon. We're all going to be dead soon. And all we'll be remembered by is what seeds we did and did not choose to plant. So whether you choose to do something or you choose not to do something, you will have an impact one way or the other. If you choose not to do anything, then that's going to have an impact. If you choose to do something, that's going to have an impact. The decision is up to you. Okay. So anyway, I hope that this conversation has been beneficial. I hope that we learned something today about investing. We do this every Tuesday, so feel free to join us. And also, if you want to see any recordings of any classes, they're all recorded. Chanel's in the chat. She puts them all in there. You can log in at theblackstockmarketprogram.com, theblackstockmarketprogram.com. And also I just put a list of what Dr. Boyce is buying. So I picked about, I think, 5 stocks for this week that I really like based on my research that I'm personally investing in. So, and you can go through that list. And if you just want to follow along, you're welcome to do that. All right. And also, just to finish, I will be in Los Angeles doing the first step of the Black Wealth Bootcamp tour. I'm going to just do, I think it's 5 cities. I think we're doing LA, Brooklyn, Houston, Dallas, and Philly. So you can fly into whatever city you want to come to. And what we're going to do for those 2 days is we're going to do deep dives on my new book, The 10 Commandments of Black Economic Power. And we're going to go step by step. I'm going to talk about implementation. I'm going to show you how to create your own economy. Now, where you don't have to lean on the broader economy, you can literally create an economy in your own family. A lot of people don't know this, but we're going to break all this stuff down, and we're going to take notes. And then when you walk out of there, you'll have a level of economic understanding that will exceed everybody else in your family. I guarantee that much. All right, guys. So have a good day. God bless you, and stay black and stay strong. Love y'all. See you later. Bye-bye.